Now, oil prices surged to their highest point since November. Saudi Arabia and Russia extended their voluntary supply cuts by 3 months to the end of this year. So what does it mean for consumers? Christian Clausen with Burns Wealth Advisors joins us to talk about that. Good morning.
Good morning.
So the prices are high for the year as Saudi Arabia and Russia have basically teamed up to cut the supply.
Exactly.
So that's kind of why we're seeing these prices tick up?
Yeah, and the reason is to try to stabilize oil prices at these levels, and obviously that's very profitable for them as well.
For consumers, and sometimes people forget that there's marketing costs, there are refining costs, there are all kinds of costs that goes into gasoline. Crude as a price is about half of it, roughly.
Yeah.
But it will mean rising prices for consumers, and that's why we're seeing what we're seeing at the pump.
Right, right. And it's good and bad. You know, for consumers, obviously it's very bad, like with energy prices, like just keep on going up. Gas pumps, obviously one, but you have to think about all manufacturing, anything that's being produced is going to take energy to get there. And of course, that's going to keep prices high.
There was a time in South Louisiana, and some people still do it, obviously down in the Houma and Thibodaux areas, Port Fourchon, they still kind of root for higher prices. There was a time when it was seen as a good news for the state budget and good news for the state's economy. We're not completely insulated from that, but for the industry, sometimes they don't like uncertainty either. What's it mean for energy companies?
Well, obviously with energy prices staying high, that means, good profitability. And being stable, you can also do a lot of forecasting. And so for companies in general, like it's great. But we think about it as, we think energy is a great sector, as an investment perspective, but we want to make sure that we diversify and don't put all our eggs in that basket, because typically energy underperforms, if you compare it to the S&P 500.
And it puts inflation pressures on, obviously, too. So
yeah, absolutely.
It makes life a little more complicated for the Fed as it tries to hit this 2% inflation target?
Yeah, and we've seen also like just the market from, like in August, with Fed is going to have to continue to raise interest rates because inflation is not nowhere close to the 2% that they're aiming for.
I don't want to get too far into the weeds. The Fed looks at something it calls core inflation, which doesn't include food and energy because they're considered to be more volatile. They go up and down. But obviously, if your delivery company is raising prices, if your manufacturer is raising prices, it becomes, a part of core inflation.
Yeah. Oh, absolutely. Yeah.
So what's your outlook? Do you think we'll see, another longer period of these high interest rates?
Well, we've seen that OPEC just decided they were going to keep supply continued low for the next 3 months. So we expect for the rest of the year we should be fine, from oil prices at these levels. But after that, we kind of just have to pay attention to what OPEC tells us.
All right, Christian Clausen, thanks as always. Appreciate it.